Okay, good morning. It's Wednesday. It's crazy out there. Have a cup of coffee. Let's talk through it. So, the last 3 months have been nuts. Internationally, locally, provincially, just it's been wild. But I think as a society, we need to know where we're coming from with this, where we're going to go with this. Right now, it looks like all uncharted territory and everything looks crazy. But if you've been following events, you have a bit of a chronology of where things have come from. So we're going to take a dive on through that and try and give people perspective so they understand what we're working through. Hopefully give people some ideas of how long they should be working through it and some strategies to deal with it because planning is essential. So we're going to start locally and provincially. So we had a new government come in, the UCP. They wanted to rein in provincial expenditure. So they didn't propose any new taxes to offset revenues. So thus, we required cuts. So healthcare, post-secondary, K-12, everyone felt the pain. Edmonton, where I live, is a government town. It's where a lot of provincial services are. So it was dramatically affected. So some people were calling for maybe we should have a PST. Ultimately, that wasn't on the table. It's conservative government. Should be expected. They don't want to do that. These result in cuts. Edmonton then faced a relatively high unemployment rate compared to its other city peers. In the previous government, these budget deficits were taken on through a different means. So a government can run a budget deficit with the intent to maintain stability in the government funding. More on this later. But specifically, the NDP did this to weather the economic storm of a low price of the oil. Because Alberta extracts a large component of its revenues via oil royalties. Without those royalties exhibiting such a large revenue base, it ultimately results in a lower revenue line for the Alberta government, and thus it's harder to support the infrastructure and expenses that are on, its income statement. So this oil reliance sounds like an Alberta thing, but it's not. It's actually a global thing, and we're going to talk about that and its implications, because it's why oil has crashed at such a low rate. So back to our UCP. So UCP cuts cause a tempering of the Alberta economy. They cause a big tax break. It fails to create capital projects and incentive in the oil patch because the price is generally depressed. Companies like Husk Energy then lay off a bunch of staff, creates more economic uncertainty in the market. The UCP then work to try and mobilize capital in the sector. They try and do stuff like bring AIMCO, the Alberta Investment Management Company, into the fold to invest more capital in the oil sector, have pensions managed under AIMCO. This is supposed to try and incentivize capital development in the natural resources sector. At the Edmonton level, it ultimately means that unemployment rises to the second highest in the municipalities in Canada, kind of up there with Windsor. That's unusual for Edmonton, which weathered this storm relatively well of the oil patch because it's, again, a government-run town. When you are funding all provincial expenditures through a government deficit, ultimately those jobs remain. Whereas in Calgary, which is more private sector focused enterprise, it's why they lost a lot more business and had high vacancy rates. So in the background to this, why this oil price collapse and why did things get worse? So the background on the oil side. So there's a bit of an international crisis building at this point. This is kind of like December, January-ish. There starts to be this COVID thing coming through in Wuhan, China. What that initially does is it curtails the demand for oil in the Asian sphere. That means that countries that control the oil production are seeing less demand, which means they're producing the same amount, which means the price starts to go down. So OPEC, which is the Organization of Petroleum Exporting Countries, which control about like 44% of all oil production, which allows them significant impact over oil price, they decide to meet. Coffee. So OPEC operates as a cartel. So what that means is they artificially limit the supply to artificially create scarcity. By doing so, they raise the price of oil, which allows them to get more dollars per barrel. The reason they want to do this is these companies rely on oil revenues to fund their books. So in the backdrop of this, there's the 2014 American shale production boom. So that's when Alberta experienced, the 2015 oil recession. So that's because American production ramps up. We can't compete with their level of production because we're shipping it south to Texas. That production is produced more cost efficiently than the oil sands. So the price gets depressed to a point where our producers are making less money than they made before. The NDP, seeing this collapse because they were in power, decided to prop up the province through budget deficits. They don't curtail expenditure to accommodate the fall in the oil price. What Russia and Saudi Arabia, the big players on OPEC, do is they work together, and to try and counter shale production in the States, they coordinate to curtail supply to artificially increase oil prices after they were unable to, stop and bankrupt American producers. What this means is to stop hemorrhaging losses, they artificially increase that supply. So this is important to understand why they do this. Why would they curtail supply? It's the same reason that Alberta wants a higher oil price. These countries have built in oil royalties into their state budgets. When the price fluctuates wildly, it means that there's instability to their state revenues. So countries like Saudi Arabia, which prop up a lot of their budget on state oil production, mean they have a higher cost that they need the barrel to be to cover all their expenditures. The problem is Saudi Arabia props up a lot of its government with the oil production. So the break-even price for Saudi Arabia to make an even line on its balance sheet, so net nil at the bottom of all the expenses, is $84 a barrel US. Yeesh. Russia, 42. American shale, 44. Canadian crude, it's higher than both of those, but again, it's certainly not 84. The problem is the break-even price is what's dictating countries' needs to curtail supply. So Russia and OPEC and Saudi Arabia, they all meet again in 2020. And Saudi Arabia says, we need to cut production even more. Russia says no, they don't want to do it. They're still making some money. They're kind of ambivalent toward the whole thing. Saudi is definitely not ambivalent. They are losing tons of money every day that the oil price is that low. So what that means is they're going to war with Russia. They're going to try and force Russia through opening the oil floodgates so that all other producers, American shale, Canadian crude, Russian oil production, all falls to a point where they're losing money per barrel of oil. The Saudi plan is, well, if we make everyone else go bankrupt, but we have enough cash reserves to do this, then we'll be the only major oil producer afterwards. So they're hoping to put the squeeze on these companies' income statements so they can't support all their expenditures, so that they have to take on more debt, so that they have to pay more interest, all the while Saudi's hoping that eventually they buckle and these businesses go under, and then they can curtail supply again, artificially increase it, and then they're happy again. And inadvertently, we would probably have companies that go under here, but the oil price would go up. So, production skyrockets. Saudi Arabia opens the floodgates. They're trying to bully Russia back to the table to have OPEC make another curtailment. They're trying to bankrupt American shale. At our local level, this is exactly when the UCP try and pass their budget, and then oil price tanks again. So it's the worst it's been at this point since like 1980s. At the same time, you have this oil price war going on. The coronavirus, COVID-19 stuff is really starting to ramp up. So, isolation if Wuhan isn't working, they're building hospitals. This is kind of when we hear about it as an outbreak, but it's not yet a pandemic. It's also when we start hearing about, it moving to Iran and it's infecting people in Iran, and then suddenly it's in Italy. This is this timeline. So we're in mid-February now. Countries are beginning to grapple with economic slowdown as their populations go into self-quarantine or trying to self-regulate the economic damage. The cheap barrel of oil, although it's a benefit because now if you used oil in your production, it's now super cheap. The consequence, though, is the barrel of oil price is often a bit of a litmus test for how much global economic activity there is. So with Asia not producing a ton, it means that the barrel slides more. And in addition, it means that market sentiment begins to worsen. So this isn't yet a recession, but it's a market pullback for sure. So this would be about when all your friends noticed it and they said, whoa, the stock market, there was a big 1 point time drop. It's also kind of when people started saying, oh, Anthony, should I buy the dip? Anthony, oh, everything's on sale. So the COVID-19 crisis is now ongoing. You've got Iran, you've got Italy, outbreaks in France, This is also when there's the Diamond Princess cruise ship fiasco. This is kind of when CBC starts really reporting on it, because there were Canadians on that cruise ship who were self-quarantined. This is kind of when the NHL and the NBA start to, talk about maybe we close the season. This causes sport gambling, to gamble, good grief. This causes sports gambling stocks and other sports betting and entertainment stocks to tumble. Vacation-related stocks start to tumble. So now it's starting to affect the entertainment sector. This is kind of when, if you have friends who worked in finance, they said, oh my God, the circuit breaker went. So circuit breakers are set for the stock market to halt trading when there's a market drop from the previous close below 7%, 13%, 20%. So it clips off trading to stop, this unbelievable rapid sell-off to zero. This is when this first starts to get clipped. And everyone's going, whoa, this is crazy. Now it's like every day this is happening because people still haven't built in the impact of the crisis into financial models. And people are still trying to, escape with their money while they can. So now we're in the full swing of it. The COVID crisis reaches North America. There's kind of an institutional health crisis. There's this serious concern about quarantine. There's the talk. This is where you start hearing talk of, I should self-isolate. Social distancing becomes the new catchphrase. This is when this starts happening. While this is all happening, the American government tries to do a bunch of different market stimulus. They try and inject a 1.5 trillion capital into the market. So the money printer, they're trying to stimulate the economy. They cut the Federal Reserve rate to 0. So that means your loans accrue almost 0 interest now. It's actually worse to hold money in the bank. So they're trying to get people investing, get people out in the market. What this actually does is it just causes more economic anxiety, and people continue to leave the market, stocks continue to tumble, outlooks continue to worsen. The more people talk about it, the more people become speculative instead of built in substantially, and things start getting worse. The American Fed begins quantitative easing policies to try and just put a ton of different capital into the market to try and ease the burden of this looming crisis. It doesn't stem the fall. So instead of being, the economy is the chief anxiety inducer in chief, it now kind of switches to being the virus, coronavirus. Now, I want to stress that this is a completely unprecedented event. So global events such as this haven't occurred since World War II. So Boris Johnson in the UK said that this is an event that hasn't occurred since the long peace that was ushered in from World War II. So this is like pandemonium now, and everyone's freaking out because this is uncharted territory. People are scared, high anxieties. So to put it in perspective, if you don't believe this is a big deal, the last time there was a health crisis of this nature was the 1918 Spanish flu. The last time global tensions were probably this high, we're talking like the Cuban Missile Crisis, 1962-ish. So that's where we are now. I don't have solutions to these problems. Number one, I'm certainly not a healthcare professional. You should listen to all your chief healthcare professionals out there. Talk to your friends who are nurses if you need additional information. Use factually reported news. Follow the guides of Canadian healthcare providers. Don't listen to me. I'm just telling you that you should self-isolate. What I am here to tell you is during times of crisis, you're often told, like, don't stand there, do something. I'm going to tell you the opposite for your finances. I want you to stand there and do nothing. I want you to stay at home. If you already have stocks, they've already taken the hit. Do not make decisions that are based on emotion. Stick to low cost, buy and hold investing strategies. This is the same stuff that the late John Bogle, who's like the man who invented index funding, says. People are scared and anxious. When you're emotional, you make bad decisions about your finances. If you've watched your stocks tank, like me, like my parents, you've already had your losses. Unless you want to harvest them for tax purposes, they've already taken the hit. Stuff's going to get worse, but liquidating now just crystallizes your loss, and then you just have a big old red mark on your balance sheet for like your tax year end. There's no real point at this point. As it stands now, you should think about what happened last time this happened for the market. If you use, let's say we'll use the Dow Jones index for the States. It tracks like a lot of big companies in the States. It took 4.5 years to recover from the 2008 recession levels to 2012 for the bear market, the recession, to be erased. So just think about 4 years for a second. What's 4 years? Could be a job, could be a degree. It's not that long a period of time. It's not a decade. It's not even half a decade. I'm comfortable waiting 4 years for things to recover. In the grand scheme of an 80-year-old lifespan, it is what it is. I would hazard a guess that the 2020 crisis will likely take as long, if not longer, to recover. But if you pull out now, you lose. You've lost the money. So, would you rather be underwater for 5 years? Or would you rather be underwater with that red mark forever? If you've got financial assets that are equity stocks, there's a chance some of them might go bankrupt. Maybe those ones are the ones you get out of. But I think you take a long, hard look at your strategy first and start planning for the long haul with this. Most people are earning money via employment income, business income that they earn themselves, like tricks in at a regular rate. If you continue to invest at a steady clip every month, every bi-week, whatever it is for your paycheck periodically, you could just weather this storm out. You'll stick to your strategy. Everything will go at a leisurely pace, and you will get there in the long run. Now, that's called dollar cost averaging. You invest money at a set increment, regardless of the market, in set instruments like low-cost, broad-based index funds, more on that in a bit, to weather the storm. You're going to diversify your losses by doing so, and frankly, you're getting them at a bit of a bargain bin price. Because the markets retreated to 2017 levels, if you did not invest from 2017 to 2020, you just got all that time back. So now you can invest without having missed all those gains. And if you look at the long haul from the inception to now of where markets go, they go up in the long haul. So the next question, but Anthony, I'm worried about having an income. Okay, so let's step back and let's prepare. What can you do during these financial crunch times? Step number 1, have an emergency fund. Your emergency fund should be approximately 3 to 6 months. I keep that money in a high interest savings account. You can keep it in somewhere that's liquid and you can easily access it if you lose a job right now. If you have trouble paying rent. If you're really struggling because of some medical condition or some unforeseen payment. That's what the emergency fund is for. Top up your emergency fund, have it ready to go, have it on hand. Do not have it invested in stocks because it loses its value now. You want to have this emergency fund money ready and available. This is your, you approach the firewall and you see there's the axe behind the glass and you smash the glass because you need to get the axe out. This is what that money is. You need to be safe with it, careful with it, and use it in emergencies. Consider what you purchase. Are you buying, like my big thing, I love potato chips. I'm not buying potato chips right now. What I'll do is I'll look and I'll be like, wow, I really want those chips. And I'll take a pen and paper and I'll write down on a sticky note, potato chips. And I'll put it on my fridge. And then I wake up the next day and I look at my fridge and I look at it saying potato chips and guess what? I don't want potato chips anymore. So give yourself 24 hours before you make purchases. Chances are you'll probably say, I'll wait it out. So my advice is to stop buying those coffees out. Don't buy games on Steam. Wait till they're on sale. Stop online shopping. Cancel your subscriptions if you pay Netflix and you don't use it that much. They're draining your bank account incrementally. So consider what you purchase. Next, I would consider how you purchase. Do you use a credit card? Do you use a debit card? Do you use cash? There's lots of different ways to track how you should purchase. I use my credit card because I get the cash back, but I diligently pay it down to 0. If you don't have that diligence or are unfamiliar with credit cards, don't use it. Use a cash budget. Withdraw the money you want for the week, put it in your pocket, and ration it out. And you might find that more often than not, you're ending your week with some of that money left over because you're being more diligent because it's in your pocket. Then I would consider how you set up your savings. Do you have separate bank accounts? Do you segregate the money? Is it all just in a checking account? I have 3 different accounts, 1 checking, 2 savings. The checking account is my quote unquote slush fund. Then I have a savings account for my monthly expenditures, so rent, internet, grocery. And then I've got my emergency fund. So when I get paid, it goes to my checking. I immediately pay myself first. My money goes straight into my emergency fund, or if it's topped up, into my investments. And then I cover my expenses. It's just a part of covering expenses. Once your emergency fund is topped up, start tackling that debt. If you have credit card debt, there's never been a better time to pay it off. Interest rates have been cut in the US to 0. In Canada, I think they've been lowered to 0.5 at the time of this video. So the point being, now is a time when interest is relatively cheaper, cheap as it's going to get for some of this. You should pay that off now. No one wants to be having their monthly paycheck supporting monthly payments. Get it gone. That goes for car payments if you can accelerate them. That goes for mortgages. They're probably going to have interest deferred on it. So again, there's never been a better time to get ahead on some of this stuff. And ultimately, your cheap debt, like mortgages and student loan payments, are now even a little bit cheaper. So you should have a little bit more buffer there. But pay down that consumer debt, credit cards, line of credit, whatever that is. You want to pay the highest interest percentage stuff first. So if you have $100 on a MasterCard and $100 on a line of credit and $100 in student loans, you have 19%, 6%, 3%. You pay the one that accrues 19%. Get that one gone first and work through them logically. Don't try and fundamentally change your income management structure in 1 week. It's not going to work. It's really difficult to do so. Start incrementally. So my approach is I save 50% of my net income directly for my investments. The other 50% is living, food, fun money, whatever I want. But that 50% I pay first. You might not have the capacity to do 50%. You might be like, whoa, Anthony, I can only do 10%. That's great. Do 10%. Maybe if you stop buying coffee, you'll be able to do 15%, 20%. You work into it. Just try and have yourself a financial plan you can stick to. Because if you try and go, Spartan and there's like nothing in the house except Cheerios and oatmeal, like you're going to have a terrible time. Now is a time when emotional stress is high. You kind of need the comforts at home a bit. So if you're struggling and you suddenly cut down your expenditures to 0, well, gosh, man, living at home is going to be brutal. So make it reasonable. Make it something you're going to have the willpower to do every month. So now we got a financial plan. Get our emergency funds operational, pay down that consumer debt, invest diligently. And people are going to say, Anthony, gosh, what should I be investing in? Or, oh, Anthony, is the market going to fall more? Or, oh, Anthony, you shouldn't invest now. Wait till it bottoms out. If you're a savant and can time the market, awesome. If you're trading options and you're making tons of money, awesome. I'm an average guy. I'm going to invest every month because I don't know when the market's going to correct. I don't know how long we're going to be in the COVID crisis. I don't know how long we're going to have to weather this storm. So I'm just going to invest every month and put it in broad-based, low-cost index funds. An index fund typically matches, the TSX or the S&P 500, and they try and hold many different companies across your dollar. So that way, if, Apple were to go under, well, you lose 4% in your ETF. But it's not 100%, because if you held Apple stock, it'd be 100%. So that's my strategy. So now let's talk about the health strategy. I am not a healthcare professional, but gosh darn it, listen to good news sources. Listen to your friends who are health professionals. This hasn't been seen since peacetime. Wash your hands, good hygiene, vitamin D, all that stuff. This hasn't been seen since the Spanish flu, but that doesn't mean we have to pretend it's like the Spanish flu. Now we have the internet. You can call friends. You can virtually gather. I play a lot of Dungeons and Dragons. My groups are moving to an online virtual space. If you play board games, you can do the same thing. If you're big on video games, play online. Read books. Garden. Whatever it is that you do inside to make you have a more fulfilling life, do that. Introverts, this is your time to reach out and help extroverts, because the extroverts, we're going to struggle a bit. So reach out to your fellow Canadian. Be there for them. Help them stay accountable to their financial goals. Help them stay accountable to their, health goals. Try and keep everyone less anxious. Above all else, it's really important to stay calm. Preparedness is your number one tool against these anxieties. But if we're prepared together, we're going to get through this. A really good friend of mine, Brad Doyle, he's a graduate of the U of A for the marketing program, Bachelor of Commerce Bachelor of Commerce. And he spoke to me about starting a website to help people with financial insecurities from a Canadian perspective. So we're doing that. So you can look us up at www.mapletap.ca, where we're going to provide financial advice through a blog, and if I like this format, maybe also a vlog with better sound quality and less coffee interludes. The website's up. We have some initial postings. We're going to be trying to post a regular clip every week. Hopefully this helps you deal with some of the concern and the crisis, and hopefully you feel a little bit better after all this is said and done. So cheers to you. Enjoy working from home. Have a cup of coffee. Relax. We're going to get through this together. So happy Wednesday. Good luck to you out there.